what is going on with interest rates? So, somebody that for many, many years, you could be in finance, you could be, really tied into what's going on in the world, and you may not know who the Federal Reserve Chair is. Well, this person, Jerome Powell, has become a household name over the last couple of years. And every time he gets on the microphone, everybody holds their breath. So he was on a microphone again this week, and here's basically what's going on. Inflation is running hot. It's not getting any better. And it is really, really, really affecting mortgage rates. So mortgage rates are back over a 7.5% level on average throughout the United States. And it's because every time the Fed chair or anybody from the Fed talks, there's a lot of speculation and bonds and everything else that goes into the treasuries, everything that goes into mortgage rates and where they are start trading. And we have to just wait and watch what happens. So over the last week and a half, rates have plummeted all the way down to almost a full basis point, roughly 90 basis points worse. And then they recovered, and then they plummeted again another 40 or 50 basis points. And all of a sudden this morning, we're back up another 30, 35 basis points. So it is up and down, up and down. We are on a roller coaster ride. So I want to try to help explain why and what that means. So the Fed chair, Jerome Powell, he spoke. He said that there is uncertainty that there may even be a rate cut in 2024, when at the end of last year, everyone out there was speculating that there was going to be up to 6 cuts this year. So that is a huge difference, 6 times cutting the rates versus 0 times cutting the rates. The jobs reports, inflation data, the CPI is the inflation data that comes out that everyone really watches. All these things are coming in a lot different than anticipated, and it's causing everybody to kick the can down the road. So for now, we're not really anticipating any good news on interest rates. And so we have to start digging in for a higher for longer strategy, like other people have been, kind of sounding the horn on for a while now. And so what does that mean? How do we look at real estate as buyers from a mortgage perspective, trying to obtain a mortgage? What do we want to do with this information going forward? Well, the biggest thing is you cannot forget that real estate is a long game. You don't, again, you don't wait to buy real estate. You buy real estate and then you wait. So people that came out of the 2008 situation, that was also crazy and hectic, that really bought real estate long term, created a ton of wealth for them and their families going forward. I think there's a lot of opportunity right now in a lot of the same ways. We're starting to see inventory rise, but we're not seeing appreciation change that much. Appreciation is still holding on strong. So real estate is more valuable than ever. There's so many people that need homes, that need a place to stay, whether it's their primary residence or to rent. Real estate has value long term. So I would still recommend looking into situations to make, see if it's going to make sense for you to buy. We can help you with that. Make sure as an investor, you're going to be able to at least break even to start building that equity through someone else's bank account, as a minimum strategy. Again, there's different products as well that can help take this guessing of every week whether rates are up or down away from your stress levels. Temporary rate buy downs. A lot of people used to say, marry the house, date the rate. That's what they're talking about. They're talking about a temporary rate buy down. And so those strategies I'm, really working hard with on a few of my clients right now to get them into homes, take the guessing out of it, get you a lower introductory payment going into a home, get settled in, save some money on, closing costs. Sellers, because there's more inventory on the market, are going to be more willing to negotiate with you now than when rates do finally come back. Everybody gets back in the market, they're going to be in a little bit more control. So as a buyer, we have a lot more control right now than we have in many years, especially in the DFW market and the Texas markets. And so don't freak out. Rates are going to freak out. They're going to do what they're going to do. We're in an election year. There's tons of volatility that are going to be happening. But if you stay calm, stick to a plan, let us help you with that plan, then I think there's a lot of opportunity, and you're going to be super happy in 3 to 5 years when you look back. You're gaining equity instead of just giving it away all on rent or what other situation that you're in right now. Everyone's more than happy to go out there and get a super high interest rate on a car, super high interest rate on a credit card and build debt. So let's start building equity and use this turmoil to our advantage. In times of crisis, there's always opportunities that come out of that. So if you have any questions, let us know. Keep watching our videos. Please comment for any topics or questions that you might have that you want us to talk about. Like and subscribe and all that good stuff for us to really help us propel and get you, more information. So stay locked in. Don't panic. Now is still a great time. We love when everyone else is nervous because that's when we get to take advantage. Have a great day and look forward to talking to you soon.